Buy and hold. This is the classic strategy that most people think of when they hear real estate investment. Investors buy properties and keep them for a long time, making money through rent while benefiting from the property becoming more valuable over time. Pros: steady money from rent. Property becomes more valuable. Tenants help pay off the property, increasing what you own. Cons: managing property can take a lot of time. Empty properties mean no income. Changes in the market can affect property values. Ideal for long-term investors looking for steady income and willing to manage properties or hire someone to do it. For example, the buy and hold strategy is good for investors who have enough money and are ready to commit to managing real estate for a long time. If you can find areas where properties will become more valuable and get tenants who can pay the mortgage, this strategy will let you make money regularly while increasing your wealth as the property becomes more valuable. House hacking, a fun twist on the buy and hold strategy. House hacking means living in one part of a property with multiple units while renting out the others. Pros: lowers or removes living costs, provides steady income. Quality for loans with lower down payments since you live there. Cons: living close to tenants can be tricky. You need to manage the property. Risk of not finding tenants. It is ideal for new investors who want to start in real estate with little money up front. For example, you bought a big box of assorted chocolates. Instead of eating them all by yourself and probably wasting some, you decide to share some with your friends. In return, they give you a little bit of money for each piece they eat. By the end of the treat, your friends helped you eat the box of chocolates. You've also collected enough money from them that your own pieces of chocolate were free. House hacking is great for first-time investors looking to lower their living costs while gaining property value. If you can get a loan because you live there and don't mind sharing space with tenants, this strategy can remove your living costs, helping you save or invest more money while you make regular rental income. Flipping, an active strategy focused on quick profits. Flipping means buying undervalued properties, fixing them up, and selling them fast for more money. Pros: chance for big returns quickly. Improvements increase property value. Quickly gather money for more investments. Cons: need a lot of money up front. Changes in the market can change profits. High taxes because of short ownership. It's ideal for experienced investors who really understand the market and fixing up properties. Example: imagine you find an old skateboard at a garage sale. It's a bit old and beat up, but you buy it for $20 because you know with a little work you can make it much better. You spend some time and another $30 to fix it up, repainting the deck, adding new bushings to the trucks, and replacing the old wheels with new ones. After working on it, you sell it to a friend for $75. You spend $50 buying and fixing it, and sold it for $75, making a $25 profit just by improving it and selling it for more than you spent. Flipping is perfect for experienced investors who know the local real estate market well and understand how to fix properties. If you can figure out fixing costs and have the money to buy undervalued properties, flipping lets you earn a lot of money quickly while you build up funds for future investments. BRRRR strategy: buy, rehab, rent, refinance, repeat. This strategy is like flipping houses, but instead of selling the property after fixing it up, you rent it out and borrow money against it to buy another one. What is it? The BRRRR strategy involves buying houses that need work, fixing them up to make them worth more, renting them out to make money, borrowing against the increased value, and then using that money to do it all over again. The aim is to build a big collection of rental houses quickly. Pros: builds a big collection of rental houses fast. Borrowing money again lets you use it to buy more houses. Cons: you need to know a lot about fixing houses. The more money you make from rent needs to cover the bigger loan payments after you borrow again. It's ideal for investors who like the idea of flipping and renting houses and want to grow big quickly. Example: imagine you buy a bunch of used books that are a bit worn out for $5 each. You clean them up, cover them nicely, and then start renting them out to friends every month for $1. After a few months, your friends really like the books, and you decide to use the money you've made to buy more books. You do this over and over, each time getting more books and more friends renting them. The BRRRR strategy is great if you don't have a lot of money but want to build a big collection of rental houses. If you can find houses that need fixing and know the local market for renting them, this strategy can help you make money and grow quickly by reusing the borrowed money. Wholesaling. This is a good way to get into real estate with not much money. It's good for beginners. What is it? Wholesaling is about finding houses that are not listed for sale yet and are below their real market value, making a deal to buy them, and then quickly selling that deal to another investor for more money. You don't actually buy the house, you just sell your right to buy it to someone else. Pros: doesn't need much money to start. You can make money quickly. No need to fix up properties or deal with contractors. Cons: you need to be good at finding these hidden deals. The money you make can vary a lot. It's ideal for beginners who are good at finding deals and making deals. Example: let's say you're at a school fair and you see someone selling movie tickets for a popular film. You buy all the tickets they have for $5 each, knowing that many people still want tickets. Instead of going to the movie, you sell the tickets to other students for $10 each before the show starts. You never planned to go to the movie, you just bought the tickets to sell them to someone else who wanted to go. Wholesaling is perfect for beginners who want to start in real estate without spending much money. If you are good at making deals and can find houses that are not yet for sale, this can be a fast way to make money in real estate. Short-term rentals. Short-term rentals mean renting out your place for a short time. Like to tourists or people traveling for work. You can list anything from a single room to a whole house on sites like Airbnb, and you can charge more per night compared to long-term rentals. Pros: you can charge a lot per night. You can use the place yourself when you want. Can make a lot of money. Cons: some places have strict restrictions. You might have more cleaning and guest turnover to manage. It takes more of your own time to manage the property. You may experience vacancies. It's ideal for people who have properties in places where many tourists or business travelers go. For example, think about having a treehouse in your backyard. Instead of letting it sit empty, you decide to rent it out to other kids in your neighborhood for birthday parties or sleepovers. You charge $50 for one night. It's a lot more fun, makes more money than if you let your cousins use it for free when you visit twice a year. Short-term rentals work great in a town that gets lots of tourists or near a big city. If your place is near popular spots or business centers, renting it out on sites like Airbnb can make you more money than long-term rentals. Real estate investment trusts, REITs. REITs are like big companies that own or help manage properties that make money, like office buildings or shopping malls. By buying shares in a REIT, you can own a small part of many properties. REITs are easy to buy and sell like game cards, and they give you some money regularly like monthly allowance. Pros: easy to buy and sell. You can own parts of many different buildings. You can get money regularly. Cons: you can't decide what to do with the properties. Changes in interest rates can affect them. It's ideal for people who want to start investing in real estate but don't want to deal with the hassle of owning an actual building. For example, imagine if you and your friends put your allowances together to buy a few toys. You decide on some toys to rent out to others. When you make money, you split it. This way everyone benefits without having to buy all the toys by themselves. REITs are great if you want to start investing in big buildings and earning money without dealing with all the work that comes with owning a building. It's like owning a piece of many different properties that all add up to help you make money. Real estate syndications. Real estate syndications are when you and other investors pool your money to buy big properties like hotels or big apartment buildings. A person who knows a lot about real estate manages the property and takes care of everything. Pros: you can get into large-scale real estate deals. Experts manage the properties so you don't have to. You earn passive income. Cons: you won't have a say in how the property is managed. Poor management leads to losses. Your money is usually locked in for 5 to 10 years before seeing profits. Ideal for people who have saved up a lot of money and want to invest in big projects without doing all the work. For example, think of it like forming a club where everyone puts in some money to buy a cool new video game console. One of you, who knows a lot about gaming, takes care of setting it up and managing who gets to play when. Everyone enjoys playing, but nobody has to worry about all the details. This is good for those who want to invest in something big, like an apartment building, but don't want to be the one managing everything. It's like being part of a team where everyone shares the cost and the benefits. Commercial real estate. Commercial real estate means investing in places where businesses work, like offices, stores, or warehouses. These places have business tenants who usually rent for a long time and pay more money than those renting houses. Pros: businesses often rent for longer periods of time. You can make more money from business tenants. Cons: it costs a lot more to get started. It can be affected by economic problems. Sometimes it takes longer to find tenants. It's ideal for those with more experience who want to go beyond the simple investments. For example, imagine you own a lemonade stand and rent it out to other kids who want to sell lemonade during the summer. They pay you to use the stand in a busy park. And because it's such a good spot, they're willing to pay more for it. You make more money with less effort than running the lemonade stand yourself. This is for those who are ready to step up their investment game and manage bigger projects. It's like owning a piece of land where businesses pay you to operate, which can make you more money than just renting out a regular house or an apartment. Real estate crowdfunding. Real estate crowdfunding lets you join more people in funding real estate projects through websites. These sites connect you with people who are building or fixing up properties, and you can help fund projects from small house fixes to big building projects. Pros: you don't need a lot of money to start. You can pick from many different types of projects. You don't have to do much. Just invest your money. Cons: the websites might charge you fees. You don't get to make decisions about the projects. It's ideal for people who want to start investing in real estate but don't have a lot of money or don't want to manage the properties themselves. For example, Think of it like a school fundraiser where you can chip in a little money to build a new playground. You don't decide how to build it, but once it's done, you get a small part of the praise and satisfaction, just like how in crowdfunding you get a share of the profits. This is great for those who want to start investing with a little amount of money and like the idea of helping others in big projects without having to do all the work themselves. Land banking. Land banking is when you buy land that no one has built on yet, with the hope that it will be worth a lot more later as more people move to the area. It's a waiting game, as you keep the land for many years without doing much with it, hoping its value will go up. Pros: doesn't need much work once you buy the land. Can make a lot of money if the land's value goes up. Cons: you don't make money right away. It takes a long time to see if you make a profit. Rules about what you can build on the land might change. It's ideal for investors with patience that are good at predicting if an area will grow in value. For example, imagine you bought a lot of cards, predicting they'll become popular and worth a lot more in a few years. You store them safely and wait a few decades to then find out they're worth 6 times as much as when you originally bought them. This is good for those who are okay with waiting a long time for their investment to pay off. If you can envision which areas will be popular in the future and are okay with waiting, you might be able to sell the land later for a lot more than you paid. Thanks for sticking with us. If you found today's content insightful, you might want to check out our previous video where we discuss habits of the rich. Don't miss out.